Hey, bulls and bears, we are back with another dose of economic reality. My name is JJ. You're watching Bull, Boom, Bear, Bust. We've got a lot of news to get into as usual. Now, first, let's talk about the debt ceiling drama. And my video that I put out a couple days ago, was it yesterday, the day before? I don't know. I think yesterday. And in that video, we talked about how Janet Yellen came out and she said if the debt ceiling does not get increased, then there's likely going to be a stoppage of Social Security checks being sent out. Now, some people in comments said, "No, that's not true. I heard that it was funded until 2030 because CNBC said that, and I saw this article." Ask yourself this question though: if Social Security is funded until 2030, 7 more years approximately, why is Janet Yellen out there saying that if the debt ceiling is not increased, that they're going to stop Social Security payments? That it doesn't make any sense. Why would she say that? So obviously the money's not there. I mean, if you believe the money's there, then that's fine. Believe what you want to believe, but ask yourself, does that make sense? Or is this just a scare tactic to make people think that they're not going to get their checks sent out if the debt ceiling isn't passed? Therefore, putting more pressure on the lawmakers, etc., to pass it, right? That could be it too. I'm just telling you what she said. Doesn't add up as far as what they're saying. Social Security being funded. Also, where's the proof? Do you have a picture of a vault with the money in it? Send it to me. Put a link down in the comments. Right? It doesn't exist. Right? So all this money they're saying is there. It's digits on a screen. It's virtual money, digital money, fiat money, fake money, whatever you want to call it. They could tell you that they have $100 trillion. And how are you going to know otherwise? It could be $100 million digits on a screen somewhere, and they'll call that money. That's what happens when you have fake money. You don't know if it's there. And that's why you see so much spending. When you have banks that loan out money that doesn't exist, you create this spending splurge, and therefore you have people spending money all over the place, lines at the mall, lines at the store, lines at the football game, lines at the stadium, because people can then go out and do things and purchase things that they normally couldn't purchase because now they have this credit, and they can run up so much debt that all they have to do is file bankruptcy. The debt gets deleted, and then they start all over again. 10 more years of spending and consumption and very little production, right? A lot of people spending, not very much production. That's why we see this constant rise in the cost of living year after year after year. It's pretty amazing, though. Back in 2007, 2008, we saw deflation, and it actually turned out to be a good thing for a lot of people. A lot of people then could afford a home at that point. Cost of living actually came down for a bit, until they started pumping trillions of dollars into the banking system, and therefore creating this economic boom that lasted for almost 10 years until 2020, or over 10 years. But if you look at the bottom, it was about 2012, and then we started going up from there. So then 8 years from there to 2020, so whatever. But now things are different. We're not seeing falling prices. I remember back in 2008, buying a vehicle and going into the dealer and being one of the few people there, and they were saying, because gas at that time got up to over $4 a gallon here in California, and I think oil prices were $100 plus. I believe it was the summer of '08, if I'm not mistaken. I have to look at the chart, but around there. And the dealer said, wow, nobody wants to buy V6s or V8s because everybody's worried about the price of gas. Now, and I got a crazy good deal on a V6 back then, by the way, a Honda Pilot. Now, there's no denying it. Gold is hot right now. Prices are soaring, and experts are predicting even more to come. Not so long ago, gold reached its all-time high of $2,069 per ounce, and now it's inching even closer to that number again. Bank of America, one of the largest banks in the world, is saying that gold will rise further still to over $2,200 an ounce later this year. So what, right? Well, gold is already a safety net for your hard-earned money, and now when the stock market is all over the place and the value of the dollar is uncertain, being safe counts like never before. Noble Gold is offering a free 5-ounce America the Beautiful coin for any qualified IRA or 401k rollover. Terms apply. A solid silver U.S. Mint issued coin celebrating our national parks, free with every qualifying precious metals 401k or IRA rollover. You can't go wrong with Noble Gold investments. Call 877-646-5347 or go to bullboomgold.com. That's bullboomgold.com. Link down in the description of this video. Gas prices are even higher here in California. Even though the price of oil is not as high as it was, the gas prices are still way high. And you can't find those kind of deals, and vehicle prices are not falling like they did back then. So we're in a whole different world, a whole different ballgame. Deflation would be a good thing, though. If we see a credit freeze, it would cause a lot of pain, a lot of job losses, a lot more layoffs than we're already seeing. A lot of people losing their jobs, therefore losing their cars, losing their home, getting evicted. A lot of bad things would happen. But ultimately, if the cost of living comes down, it will be better in the end because those same people can then get back into the game at a much lower cost of living. So first you have to go through the pain before you start the recovery and for things to get easier. But most people don't want that to happen. Most people just want the good times to last forever. They don't want there to be any pullback, especially the powers that be. Now, if we do see a shutdown, though, with this debt ceiling drama, we're going to see federal workers not get paid. So ask yourself, how long is that going to last before they come together and make a deal when that group is not getting paid, so to speak? Let's get into this recent article out of Yahoo Finance. A sign of trouble: why more Americans are missing their debt payments. Folks, you don't need to read that article. You know why. The cost of living is severely outpacing incomes. We have so many more job losses than we have jobs created, even though they're telling you the opposite. If you look at the number of job losses each month, it's close, or each week rather, it's close to 250,000 of new unemployment filings, about 1 million a month. But they're telling you, the opposite. They're telling you all these new jobs are being created, but every time someone loses a job and they go out and get 1 or 2 part-time jobs, that's counted as jobs added. But in the end, it's people being much worse off in many cases. Let's transition a little bit here. Let's talk about what's happening with cars. Cars are so expensive that people are driving their cars now for longer. And we hit a record now. The average age of American cars hit a record high. Now, we started seeing this in 2021. Last year, it went up again and hit another record high. So another sign that vehicles are not becoming more affordable and that people are choosing to keep their current vehicles for longer and just fix and repair them as long as possible until they blow up or drive it till the wheels fall off. If you look at the cost of maintenance, yeah, it's not fun going into a mechanic and having a $300, $400, $500 repair, maybe once or twice a year. But when you look at the car payment, the payment on a new car, $300, $400, $500. You're lucky to get anything under $400 now, even on a used car, unless you want something with tons of miles, like 150,000 miles or more. It's cheaper just to keep the old thing running. And if you fix it yourself, that's even better. You're going to save yourself a lot of money by just keeping that old thing going. And another record high, the operational, with over 122 million vehicles in operation now that are 12 years old or more. So vehicles 2011 or older, 122 million of those on the road. That's some older vehicles there, folks. All right, let's get into this report here out of Benzinga. This is the zinger right here. More than 700 banks face significant safety and soundness risk due to unrealized losses. That's out of the Federal Reserve, folks. So I've told you here that all the banks are basically insolvent. The only thing keeping these banks operational is just the rules that were passed that says that banks don't have to have the money. It's simple as that. They can loan out money without the actual funds being in reserves. In other words, you deposit money into your bank, the bank loans it out, it's gone, it's no longer there. And that's perfectly fine. That's the way the banks are allowed to operate. If you and I could do that, we would be millionaires several times over because we could loan out money that doesn't actually exist, charge interest on it, get paid back the principal plus the interest, do it over and over again. You're not just a millionaire, you're a billionaire, right? That's how these banks make money. Um, the fact that they're so greedy, they have to loan out so much money that they can't hold some back in reserves. You almost, I can see the point where someone would be happy that the bank fails because they see how the banks are operating. Now, people lose their jobs, and a lot of people get hurt when that happens. But you got to remember, with the boom, you need the bust to bring things back to sort of a normalcy, or to bring prices back down to what's called the trend line, where it should be. When you see something explode in price like this, it shouldn't just keep exploding. It should come back down to the trend line, and sometimes the trend line needs to go down and there needs to be a drop in deflation. That's what we need, a deflationary collapse. So will they use the debt ceiling as the excuse to bring on the collapse? And maybe they'll just blame one politician or one group and say, it's their fault, everything was fine until the debt ceiling didn't get increased. But think about this. In a system where you have to have endless debt, what do you call that? I call it a Ponzi scheme. Please let me know what you think down below. What do you call it? All right, we're going to wrap this one up, folks. We'll be back with another update either today or tomorrow. So please make sure you hit that notification bell and you come back and check it out. A lot more important things we're going to talk about in the housing market and more. Stay tuned. Keep stacking.